Hi everyone, this is your weekly market update from Financial Design Studio, and we felt like it was important this week just to put together a video so we can actually talk a little bit more in depth about some of these issues. And I think as time goes on, as we know the market's been a little volatile, these are things we want to talk through instead of writing. So we're just going to talk through some of these things, kind of where we've come from, where we're going, what we expect, really just because we want to give you information. We want to help you understand what's happening so that you aren't fearful, so that you aren't panicking. And as we already know, because you're so encouraging with a lot of your notes and your confidence in us, so we thank you for that. And so we just want to be sure that we're educating you and keeping you up to date. So first of all, Rob, if you just want to talk us through kind of what this is. So we started with a virus and now we have a lot of issues that are kind of spiraling into each other. So maybe just kind of summarize maybe how the market's been for the last couple of weeks, kind of where we're coming from.
Yeah, sure. So, I mean, if you flash back about 2 months or not even 2 months ago, the story of the virus coming out of China was starting to hit the tape and people were looking at that and not really making too big of a deal about it. There's been other incidences in the past like SARS, swine flu, things like that have come out of China that never really amounted to anything. So I think people kind of took a wait and see approach, but over the last couple weeks that this has unfolded, and then it went to South Korea and then Italy, and now it's here. It's just really, really mushroomed over the last couple weeks.
Okay, and what I want to be really clear so this is just our weekly update that we normally write, and what we don't want you to feel is that any fear or panic, and so we don't want to be talking about this too much to where we're doing more of that, of maybe what you're reading and hearing online. So when we're talking, we're really just talking to educate you, to let you know. So as we'll try to like slow down our pace so that you don't get anxious, but also we want to be realistic and just real, because we do know clients and we do know that this is affecting you in your daily life, in your jobs, in things like this. And so we also want to respect that this is a real thing. And so that's where we want to let you know how this is affecting each of these areas. So I just wanted to comment on those couple of things because we take this seriously, but we also don't want to be fearful. And so that's why we're just explaining things like we are.
Yep.
So we started there over the past couple of months. So kind of back up to when that started, that was really mid-January. They were kind of canceled the Chinese New Year. And so what did that kind of look like there in China? Because we have the benefit of looking and seeing what happened there and now what we can expect here. So just walk us through what that looked like there.
Yeah. So I think the first cases were reported right at the end of 2019. And by mid-January, there was enough of contagion effect in a province called Wuhan in China such that the government essentially shut everything down. So they shut factories down. The Chinese New Year was effectively shut down. They ordered people to stay at home. So it really was a hard stop. I mean, China is a very busy place. There's a lot going on. And basically the streets, shops, restaurants, everything just came to a complete halt by the end of January.
Yeah. So we were kind of talking a couple weeks ago, knowing that's what happened there. We kind of felt like we're going to see that here at some point. And we would say we're probably right at the early stage with seeing in the last 24 hours, seeing things close, seasons, NBA, kind of pause, March Madness, all these things that, are big events. Now we're kind of right on the tip of that, right?
Yeah. And that's the thing. I mean, it's, for the last couple of weeks, I think people have been waiting to see whether this would be a really big deal or not. But it, just like you said, I mean, in the last 24 hours, I mean, getting the NBA to suspend their season, now the NHL and, Trump banning flights in from Europe, and even Tom Hanks announcing that he has coronavirus, him and his wife. So I think that's just literally in the last 24 hours has really solidified that, yes, this is a big deal. It's affecting us. So now it's on to the next steps of what does that mean?
Yeah. So when we kind of walk through, and the reason that we wanted to really talk through this with you today was because every day there's been a new story. And so this wasn't necessarily, it started out as, the coronavirus, but now there's been some things added to it. And so that's really, I think, kind of spiraled the markets into what they're doing. So we just want to kind of go back through this timeline of what's happening. So the initial drops that we saw really were from the virus and how it was spreading and how we saw that happening overseas. And then last week, the Fed made an emergency cut rate, a rate cut. And that's, how many times have they done that historically?
So they've done that. That was the 7th time in the last 20 years that they've done an emergency rate cut. All previous rate cuts were right at the cusp of a recession. So the fact that they came out and did that on the 3rd of March caught people's attention. For sure.
Got it. So that's where we can see like each of these actions. Like we know the market's kind of gone down over time over the last couple of weeks. And so there's been something instigating that as it's happened. So then last weekend, we have this oil, we have this between Russia and Saudi Arabia. Walk us through kind of what happened to spur on that drop early this week.
Right. So with the coronavirus hitting, it's slowing down global trade, global economic activity, which has hurt oil prices. And what OPEC does, led by Saudi Arabia, is they like to cut back production so that prices don't drop too far. So last weekend, they were in negotiations with other OPEC countries, with Russia, things like that, and basically came to no agreement with Russia about cutting production. So Saudi Arabia decided to retaliate by announcing that they would be actually ramping up oil production to push prices down even further and inflict pain on Russia for not coming to the table. So, you know, that in isolation is not a huge deal. They did this tactic in 2014 and 2015 to try to hurt the U.S. Shale oil business. But the fact that they did that right in the middle of this whole coronavirus uncertainty just added one layer of complexity to the investor landscape that people don't really have stomach for right now.
Yeah. And so that's something where we don't know the expectation of where or how long that's going to last, but it's just saying that was a thing. That's something that has really kind of helped this to continue to spiral. So then in the last few days, and I think this is where some of these things, when we see these headlines, we just see like the European Central Bank, the Fed starting to talk. And so it's really realizing it's a big deal. So they're going to need to do something. And so now it's really, where do we go from here? And so when, you know, what do we expect because of all these headlines? So naturally, when I see a headline, I kind of come in and I say, Rob, what does this mean? You know, and so this is how we talk amongst our team. We say, this is what we're reading, and you're reading the same things, whether it's the headline because you get enough of the story just from the headline, or you read the whole article. And so this is where we need to kind of put into place, what does this mean? So we hear these things. And so now we're starting to hear about Fed, European Central Bank. And so these become a little more complex and sometimes not easily understandable. So this is where we thought, let's talk through some of those things so they can hear, you know, and understand, rather than writing, because sometimes that can be a little hard to read. So, that's how we want to go from here. That's what we're going to talk about. So basically, we can put these into two categories. So government action, and this is a few different things. So Rob, I'll let you kind of talk through today, yesterday, this is what we've been seeing.
Yeah, so as reality really hit home in the last couple of days, particularly yesterday, you know, we've quickly moved on from, will this be a problem, to how are we actually going to solve it? And, you know, you kind of think about the 5 stages of grief or whatever it is, where you have to go through these different stages. Well, with every crisis and uncertainty, you kind of have to go through different stages as well. And right now we're in the stage of the market, and everybody's looking at the federal government, European governments, central banks, to come up with a solution to try to at least mitigate the downside scenarios. I mean, I think the market accepts that we're going to go into recession, that there's going to be a slowdown for a couple quarters. But what they're really looking for right now is, how are we going to limit the downside from that? So they're, you know, last night, President Trump had an address where he's talking about, you know, some stimulus, banning flights coming in from Europe. Congress is in the middle of negotiating some sort of stimulus package. We'll see how that goes. But really, I mean, the market is looking for action by the governments. We would expect the Fed to cut rates again next week at their meeting, if not sooner. And we'll see what happens. But that's really where the the attention is right now.
Yeah, and then even so, we've got the European Central Bank, we've got the Fed, we've got potential stimulus packages, which we would expect something, and then it's even just the coordination of all of those working together. So, you know, one can do something, but, you know, some of these things that we've heard recently, especially this week, it's, are we disappointed? And so then the market moves lower. So it's coordinating all of those things together.
Yeah,
so,
it's in previous episodes, particularly 10 years ago during 2007, 2008, it took a while for governments to kind of get their act together. So they would announce something, market would be disappointed, go down further, and kind of force them to keep upping the ante on helping the economy out until they finally got it right. So, I mean, you know, one thing I would say for sure is, you know, this is not going to be a straight line. There's probably going to be some disappointments along the way as the government makes announcements, but, you know, eventually they'll get to the right spot.
Yeah, and that's something that you had mentioned as we were talking. So much of this, you know, in the past several months and in the last half of the year, we've been talking about diversification again, what that really means, and it's not just owning something besides tech stocks. And so now when we look back, it's really saying it may not necessarily move straight up, but you reminded me that in 2007-8, when we had that financial crisis, that's where when they went to pass a stimulus package, the first one failed. And so those things could happen in this process. It may not be just like a swift correction of action to fix these things and then the market follows suit. It may actually be that there's some of those steps and the market's volatile in the meantime.
Right.
So
Yep.
Okay, so that's really helpful. And this also just kind of reminds us that we just want to prepare for kind of some of that ugly volatility. It may be here, but the market needs to kind of find a bottom. We need to get some stability before we kind of know where we're going from here.
Yeah, a lot of people like to talk about V-shaped recoveries where the market goes down a lot and goes right back up. You know, I've always subscribed to the view that it's more like a W as the market and governments try to figure out how to resolve the problem. You know, we go down a lot, we get some hope that things are going to happen, then we're disappointed, so market goes back down before it eventually does come back together and start moving higher again. Or at least stop going down.
So what are some of those things? So kind of things that could drive volatility ahead. What are some of those things? Because we know oil companies, we've got really low prices here in the US. We've got that happening. And then we've got some of this liquidation, this liquidity that's been pumped in. What are just some of the things that they maybe could expect? So like oil companies, you want to describe a little bit of that?
Yeah, so this is the third, you know, quote unquote crisis I've been through in my career. And the one thing I've learned is they're always to expect the unexpected. So if you go back to 2001, 9/11 happened. That was a huge shock, you know, very damaging to the economy worldwide. But because of that, all of a sudden, several months later, we had all these accounting scandals like Enron, WorldCom, Tyco come out that, you know, may or may not have come out at that time had 9/11 not happened. Or if you go back to 2008, you know, the world's falling apart with the subprime mortgage crisis. And then all of a sudden we get news about Bernie Madoff and his Ponzi scheme. I mean, so when we get into a situation like this, where things are moving really quick and the economy is slowing down really quickly, you should just gird yourself for expecting the unexpected. So bankruptcies of oil companies or some other companies, you know, we might hear something about that at some point. There's probably hedge funds out there that have mismanaged their risk and will probably blow up or close down. So expect headlines from that. And, you know, as I mentioned before, and you just mentioned, when the Congress was preparing the bailout of the banks in 2008, the first vote actually failed and the market just completely revolted. And then a day later, they came back and approved it. So, you know, don't count on Congress to just deliver the right message at the right time. There will probably be some wrangling, particularly given it's an election year.
Yeah, true. So we just wanted to walk you through kind of where we've come from, where we think we're going, what to expect along the way. But we always appreciate hearing your questions. So please feel free to reach out via email or phone call to ask those questions and kind of say, but what about this? If it's something that we haven't talked about, we're always reading. We always like to know what you're reading too. So please feel free to keep asking those questions. We want to hear from you. And this is what we're taking care of. But it's also presenting a lot of opportunities, and we've been reaching out to you with those specific things, whether it's taking those gains and making portfolio changes now with a tax neutral, with no gains. So there's a lot of things, Roth conversions, things like this. There's a lot of opportunities. And so that's what we're really trying to find and keep track of for you, so we're not wasting this time, but making the most of it while we can. So thank you so much for listening. Thank you, Rob, for kind of explaining everything to us.
Yeah, no.
And we'll keep you up to date as we have more information.
Yep. We're here for you.
Thank you.